All right. I think we're ready to go here with the Fireside Chat. Good afternoon, everyone. I'm delighted to welcome a very special guest to our Fireside Chat, Tom Joyce. Tom is best known for his remarkable 31-year career at Danaher, where he served in multiple leadership roles and ultimately as president and CEO until his retirement in 2020. During his tenure, he was a driving force behind the Danaher business system, the legendary continuous improvement and operating excellence culture that powered Danaher's growth and innovation. During Tom's term at the helm of Danaher, the company's performance was nothing short of spectacular. Under Tom's leadership, Danaher not only accelerated its market capitalization growth, but also achieved higher annualized returns as compared to the previous 15 years. Accounting for dividends and the Fortive spinoff, Danaher's stock price rose from roughly $31 in September 2014 to over $190 by the end of 2020, representing a total return of approximately 525% and a CAGR of 33% during his tenure. Danaher's market cap also similarly expanded dramatically under Tom. By the end of 2020, Danaher's market cap had tripled during his leadership. Today, Tom brings his wealth of experience to Kingsway as a member of our KSX advisory board. We're honored to have him here today to share insights on leadership, the art of building great businesses, and how principles like the Danaher business system inform our approach at KSX. Tom's strategic wisdom and philosophy have guided world-class teams and positively transformed an already world-class company. We're excited to learn more from his journey. Please join me in giving a warm welcome to my friend and mentor, Tom Joyce.
Thanks, JT. That was really kind. Can you send that to Claire?
Yeah, right?
She might think more highly of me.
And your kids.
Yeah, my kids.
Well, thank you for being here, Tom.
It's a pleasure. Thank you. I'm honored to be here.
All right, so let's get into it. Maybe a little background and context. So you began your career at Danaher in 1989 and ultimately ascended to the role of president and CEO in 2014. To kick things off, could you briefly share your journey at Danaher and how the company evolved during your tenure?
Sure. Can everybody hear me okay on the webcast as well? Okay, thanks. Again, thank you so much for having me. It is an honor. I have been so excited to be a part of Kingsway over the last few years, and it was a joy also to sit through the morning and get a broader view beyond even what we get when we sit together as an advisory board. So thanks for having me, and thanks for this morning. My journey, well, let's start with, unlike the talent that JT and the team has been able to assemble at Kingsway, I was just a kid out of an economics degree, a small Jesuit under a liberal arts education out of the College of the Holy Cross, who got a chance to work at a place called Anderson Consulting that later became Accenture for about 7 years. Before I had the good fortune, and truly is good fortune, to have had the Danaher Corporation actually as a client of mine in late 87, 88, and into 1989. That's how it all began. Danaher was, I checked the annual report many years ago. I think in 1989, Danaher was roughly $700 million in revenue. And so it really was a stroke of luck, in a sense, to be assigned to Danaher as a young consultant at what was then Anderson Consulting. The famed author Jim Collins talks about a concept called return on luck, which is a really interesting concept. And you'd have to sort of read how Jim unpacks that. But I'm, I guess, really just a product of a return on luck. I was lucky to be able to join Danaher back in those days, the small company, and then the return came really in the form of the opportunity to have great mentors along the way and a journey through marketing roles and then manufacturing roles where I actually had to make real product every day, punch a clock with steel-toed shoes on, and eventually ascend to running a relatively small business at Danaher and taking on broader responsibility over time up to and including the water quality portfolio, the life sciences and diagnostics portfolio, and then ultimately through the mentorship of my longtime partner and good friend, Larry Culp, who now, of course, is running the various parts of what we all know as General Electric Company, ascending to the CEO role in 2014.
Yeah, wonderful. Thank you. Maybe tell us a little bit about some of the defining moments that shaped your career and importantly, your leadership style and Danaher's culture over that period of time.
Well, obviously it was a long journey, and so, I had the opportunity to be a part of a growing and evolving culture of talent development that in the late 80s, Danaher was only 4 or 5 years old when I joined, was really just a vague concept. And through the leadership of Mitch and Steve Rales, our founders, George Sherman, who was our first president that wasn't one of our founders, and then ultimately Larry, I had the good fortune of being part of an evolving talent development process that very much involved taking on different and diverse roles, putting you in challenging situations, sometimes being more than a little bit out of your depth, over your head, in some stressful situations, eventually running businesses at the appropriate scale, at the appropriate time, that really I look back on and say, that was sort of one of the secrets to success at Danaher, and certainly one of the secrets to success with me is having those opportunities progressively along the way. And I had the opportunity, along with a host of others, to grow as a leader as Danaher grew as a business. And so we kind of followed parallel paths as people in an enterprise together.
Yeah, amazing. Let's switch to what I would call Danaher's secret sauce, DBS, and the long-term success at the company. So obviously Danaher's famous for DBS, and so maybe in your own words, maybe describe, what is the Danaher business system, and why do you think it was so foundational to Danaher's success?
So there's a couple of relatively short definitions or descriptions of the Danaher business system that maybe would be helpful to start with. The first is, and the shortest, is common sense vigorously applied.
Say that again.
I usually do. Common sense vigorously applied. The history of DBS, and I'll get you to the other shorter definition here in a minute. DBS came as a function of Danaher's knowledge of and experience of and learning from the Toyota production system in the late 80s. That's where it came from. That's its genesis. And applying the tools of the Toyota production system in the late 80s essentially was an experience of adopting those tools and codifying those tools and making those tools part of the way we ran, in those cases, a fairly industrially oriented manufacturing group of operating companies. And in fact, it wasn't even known as the Danaher business system in the late 80s. It was known as the Danaher production system, because it was fundamentally applying the tools of the Toyota production system to manufacturing, to production processes. As DBS evolved, one of the ways it evolved was through the coming to the understanding that the tools that we were applying in a production environment were equally applicable to what we started to call carpet land, to the places where we weren't necessarily making a physical product, but we were producing a service And some of those services could be just internal services, not even necessarily external services. And there were a whole host of tools and concepts, several of which, by the way, are on a slide that you saw this morning, whether it was visual management or Kaizen, like continuous improvement. Those tools became widely deployed throughout the organization, which sort of brings us then to the second way we came to describe DBS. As it became more than just a set of tools, as it became a thought process, as it became a set of beliefs about the ability to drive, to keep it simple, continuous improvement, the second definition became DBS is who we are and how we do what we do. So the reason that definition is important is because of the way it starts. It became who we are and then how we do what we do. In other words, it became fundamental to the nature of the people and the thought processes and the philosophies and the beliefs and the value system of the company. And so when that happens, that foundation becomes the bedrock on which all the tools sit. And it becomes one of the reasons that so many companies tried and failed to replicate the success of the Danaher business system, is because the focus was on the tool instead of on the foundational culture that allowed those tools to be sustained and repeated and essentially believed in over and over and over again. So that's, without going into all the tools and everything else, that's essentially, to some extent, the secret sauce.
Yeah, that's amazing. I think that probably wouldn't naturally be intuitive to people as a sort of a package of tools. Like, tell me about the challenges of making that who you were. Like, how do you sort of initiate that and sustain that over time?
Well, it's actually not as hard as you might think. It's hard if you're an enterprise that's sort of you're a big company, you're a full-fledged company, you're looking across and you're trying to benchmark something like the Danaher business system or another system of success, but you've got a huge enterprise, unlike where we started at Kingsway, where we're starting small, we're building incrementally, search after search, company after company. At Danaher, think about it. If you go back to the late 80s, when we were essentially small, call us 6 operating companies, maybe even just 4 of scale, and then you begin the process of deploying tools and driving performance and acquiring businesses and driving tools and driving performance and acquiring businesses. The reps, the repetition of that is creating a culture, and in some respects you don't even know it.
Right.
It evolves.
Yep.
So again, that's why some of this is difficult for other businesses that are real businesses of scale that are trying to transform themselves. It's hard when you think that you can do it without all the reps that lead to doing it well over time.
Sure.
And we just had the benefit of now 40 years of reps.
Yep. So it just sort of organically becomes hardwired in the DNA over
Right.
reps and time and sequentially.
Right.
Yep.
Right. We are going to get to Kingsway at some point.
Yeah, no, we're going to get there. So one more on Danaher and sort of operating in a decentralized model.
Yeah.
So obviously over 4 decades, Danaher transformed from a collection of what I would describe as maybe sort of more unglamorous industrial businesses into what is now a world-class science and technology company.
Yeah.
Compounding shareholder value at over 20% per year over a very long period of time. Obviously, you accelerated that transformation during your tenure as CEO. So, like, what were the key strategic evolutions or decisions that enabled that long-term success? And then the transition to Kingsway.
Yeah.
How do you think we can apply those lessons as we envision the future trajectory of the Kingsway platform?
Sure. Well, unglamorous is probably not just your own definition of where we all started at Danaher. My mother, when I joined Danaher in 1989, my mother, when she would be asked, "What does your son do at Danaher?" or "What does Danaher do?" she would say, "I don't really know, but I think they're some form of a widget manufacturer." And that just speaks to what an industrial company that was unglamorous sort of was and felt like to anybody who wasn't part of it back in 1989. But the performance and many of those metrics that JT shared earlier that I had the good fortune to be a part of in my tenure really began under my predecessor, Larry Culp. Larry took over Danaher in roughly 2000. And during his tenure, he started to lead an evolution of Danaher that transitioned the portfolio from being what you would safely describe as an industrial products business, unglamorous as it might have been, great businesses, reasonably good growth businesses, tremendous gains in profitability and cash flow, driven by the Danaher business system, driven by terrific capital allocation and outstanding performance, driven by a talent flywheel that continued to evolve. And at the point where I succeeded Larry in 2014, the business had moved significantly away from capital being deployed to highly industrial capital-intensive businesses, to capital being employed to more more top product technology businesses, specifically, for example, water quality analytics businesses, and increasingly medical diagnostics. So what I had the opportunity to do following Larry was to then sort of accelerate that process even further by not only continuing to deploy capital towards more technology-oriented, in my case, life science and diagnostics, medical diagnostic businesses, but also to exit a number of our legacy businesses that were our more industrial businesses that would have been characterized as less growthy than the newer businesses that we were acquiring, and generally lower margin than the businesses that we were acquiring. Very good businesses, but not quite as good as the businesses that we were buying. And so what we did was we gave birth to new public companies that took these terrific businesses that we had built at Danaher, acquired and built over time, and created businesses like Fortive, for example, that a good friend of mine, Jim Lico, spun out of Danaher and has now run as a public company. A business called Invista, which was our dental products business. Again, one of the leaders in the dental market that made sense as a public company. And then finally, most recently, Veralto, which is run by someone that I worked with extensively over a long, long period of time, going back to water quality, Jennifer Honeycutt, who's doing an outstanding job in what were businesses that I was responsible for years ago, the water quality businesses, and then our product identification businesses. So many of the step-ups in performance under my tenure from 2014 to 2020 really came as a function of that evolution of the portfolio, as much as it did from the raw performance of those businesses during that time frame. And so I think coming to Kingsway now, I think one of the things that first and foremost has characterized what the team has done well to this point and continues to do well is they're putting a view towards the market first as opposed to the company first. And that was kind of fundamental to the evolution of Danaher and the uptick in the multiple over the 6 years that I led the business, is putting that increased focus on the nature of the market dynamics and knowing that the market dynamics were essentially the foundation on which the performance of that business was built over time. And so portfolio evolution, and now with the opportunities that the team has here to construct that portfolio with the fundamentals, is just an unbelievable opportunity you guys have.
Yeah, well, we think so.
You know so. You know so.
All right, so let's talk about your role on the KSX Advisory Board.
Yeah.
We're lucky to have you. So you joined KSX Board in 2022. Maybe start with what attracted you to Kingsway, our model, and this advisory role?
Yeah, well, obviously it was the CEO. I mean, without the CEO, it never would have happened. The truth of the matter is that JT and I had known one another for several years, but we had never really talked about the nature of what Kingsway was. And as in a phone call of a few years ago, JT kind of briefed me on Kingsway, but more importantly, the search model and all that was search, which I only had a really limited perspective on. But the more JT unpacked that for me, and I came to understand much of what I think was shared with many of you this morning in terms of the power of the search model, it really became very, very intriguing to me. But I think the difference between, say, joining the board of a business and being an advisor into the search model at Kingsway is the time that we get together in our advisory meetings with each of the team members, some who obviously own businesses, some are the operators and residents who are searching today, is really incredibly energizing and rewarding for me. If I think about the things that give me joy in life, and that was one of the great pieces of advice I got as I was retiring from Danaher, is when someone said, "Tom, don't commit to anything that isn't going to give you joy." And one of the things I realized over time, both looking back on my days at Danaher and my days in the last 4 or 5 years, is one of the great joys that I get in life is spending time with young, up-and-coming leaders and helping them think through not only what do they want to do, but how do they want to do it, and how to help them be successful in their business and personal lives. And Kingsway is just a really unique opportunity to do that with some incredibly talented people. I mean, one of the amazing things for me, looking at what JT and the team have created at Kingsway, is the incredible level of talent that has been attracted to joining this enterprise over the last several years. I mean, we would have searched for months through every business school at the top of the tier list that you could name to put these types of talents on the Danaher payroll, and to have the opportunity to spend time on businesses that have the growth and scale opportunities that these have with really talented people is just it's a thing that just energizes me.
Yeah, well, amazing. Me too. I mean, I think, I share that. For me, like professionally, I'm not an advisor, but, it gives me incredible sort of professional delight to be able to work with this group of people who are so incredibly talented, more so than me, and it brings a lot of delight is the word I use, but joy, right?
Yep.
Yeah, amazing. So maybe a little inside baseball on the advisory board. Maybe share with us how the advisory board, you and others, work with our KSX CEOs.
Yeah.
A little inside baseball.
Well, it's multidimensional because obviously we have folks, as you know, who have acquired businesses. I mean, if you go back to Timmy, for example, maybe Timmy has the business that was
3.5 years. Yeah.
3.5 years. So you have somebody who's run a business for the last 3.5 years. You have a couple others who've owned a business for a year or two, right? Bud's Plumbing is less than a year old, okay? And then we have our searchers. We have the operators in residence. And so the conversations are multidimensional at different stages in the agenda during the course of a advisory board meeting. So I think if I start with the owners, the operators of the businesses, we get a chance. It sort of brings me back to my old days in an operating review. We get to do a little mini operating review, and without getting too deeply into the minutia of any of the businesses, we try to help the operating leaders elevate to the point where they can identify and communicate what are a couple of the threshold sort of performance issues that they could use some help with. And by elevating into those, we can have a really meaningful conversation about how to help them. And it might be from Tyler's point of view, it might be from Will's point of view, or it might be from mine, depending on what the issue might be. As you get down to maybe some of our leaders who are early in the ownership of a business, so maybe we've just acquired it, or maybe we're just finishing diligence, we're about to close. We've had some really great conversations about what should the first 100 days look like? Maybe what should day one look like? How do we communicate well? How do we energize the team? How do we do retention of key team members? How do we do top grading when we may need to? And so I think those are, some meaningful conversations. And then, of course, we have those who are spending time looking for businesses, who are actually in the search process. And those are, I think, can be really valuable conversations we have as well, because the Kingsway model very much parallels the way we always thought at Danaher, which is market first, company second, valuation third, and always in that order. So if you like the market, you've studied the market, you're starting to understand the market, great, keep going. Let's look for the best company in that market. If you don't like the market, if the market doesn't have good fundamentals, go to page 13 in your deck if you want to know what a great market looks like. Page 13 is one of the best slides I've seen in the deck. Talks about what a great market is, those 6 or 7 characteristics. Forget it. Don't bother telling me about a good company in a bad market. And so I think this process of really keeping the searchers focused on a market, once they're confident in the market dynamics, looking for the best companies, and only then, once you've identified that company, do you manage yourself through the valuation algorithm to figure out whether it's a deal worth doing. I think that operating philosophy, that mentality that's coursed through the business, and those conversations then that we can have in the advisory board meetings, particularly around markets, I think are just terrific. I really enjoy those.
Yeah, us too. It's been really helpful and instrumental in sort of orienting the way that we think and the sort of sequence of the way that we approach looking at potential acquisitions. Incredible. Maybe just sort of I'm trying to draw a loose analog here from DBS to KBS. So sort of applying the lessons.
Sure.
Obviously, we've been developing our own business system, inspired largely by many of the principles of DBS. And obviously, in the presentation, we discussed our focus on optimizing on leadership, enterprise excellence, planning, and growth.
Yep.
Do you see any parallels between Danaher in its early days and where we are today?
Well, I think the good news is that there isn't a great parallel to Danaher in the early days. I think that's good news, and here's why. Because DBS's evolution was, simply put, lean. Then we figured out growth. Then we figured out leadership in terms of tool development, in terms of what our focus was, and so on and so forth. And that's part of that history I was talking about, from the 80s through 30 to 40 years. So lean, growth, then leadership. In the case of Kingsway, what you guys have gotten right is you've really focused first and foremost on attracting and enabling the best talent first. So you've really put, in many respects, leadership first. which is great because you get that foundation on which you can then build the search process from there. I think the movement, once a searcher is in the game and owning a business, my assessment is it's pretty well balanced between the growth equation and let's just call it the operational performance of the business overall. And it's because I think the team does a pretty good job of figuring out, well, what really does this business need? Does it need help in the back office because we can't get out of our own way, or do we have performance and talent problems, or do we have a really problem with our growth engine? And how do we move forward on that? Let alone how do we dig ourselves out of a hurricane, or a downdraft in skilled nursing on the back end of the pandemic. So I think the approach that's been leadership first, and then with a clear prioritization of what are the vital few issues, regardless of whether it's in the operational side or the growth side, whatever it might be, or the talent side, I think has been a really good process. And I think the advisory board sessions that seek to have our operators elevate to the point where they can be articulate about what those issues are and we can have a conversation is really helpful. A lot of us who grew up with not necessarily that understanding or that mentorship, perfected the ability to just confuse and distract, on the slide. I mean, the more slides, the merrier. The smaller the font, the better. We perfected that, and today I think the team is understanding how do we communicate the vital few, how do we have a meaningful conversation about that, and how do we get some help to make a difference.
Fabulous. A hallmark of Danaher's approach was maintaining a decentralized operating model. We talked earlier about our belief in the power of decentralization. Independent business units, lean corporate center, while also still somehow instilling a common system and culture. What challenges did you face driving consistent adoption of DBS across this diverse set of businesses? And maybe you spoke to this already, but to me, what best practices help maintain this sort of trade-off between both the entrepreneurial autonomy and this cohesive culture of continuous improvement?
Well, certainly bringing the team together as we do in the advisory board, 3 or optimally even 4 times a year, goes a long way to ensuring that there's communication, best practice sharing, that leaders who have realized that the phrase "it's lonely at the top" are living that loneliness every single day. And so bringing them together for that best practice sharing, knowing that there are resources that they can go to, whether it's the advisory board or the incredible ways that you guys have codified a lot of the tools and resources that they can go to digitally, by the way, is fantastic. If you go back to the whole concept of a highly decentralized, autonomous operating environment with a small center, that I know I can speak for the searchers and our operators, that is incredibly attractive to people, whether you want to call them entrepreneurs or not. Obviously, if you call them an entrepreneur, then that sort of goes with the territory.
Yep.
But remember, these are the people that we try to attract are the same people that could have gone to other operating environments where the superstructure over whatever they were responsible for would have been highly unattractive.
Yep.
We attract people who want to be in that environment where there is a small corporate center that they can go to for help, but in general, where that autonomy is something that is prized and protected and allowed to continue to exist because we believe it's fundamental to the success of the enterprise. So it's in my mind, it's the best way to run a diversified business like this. It's the way to attract talent. And optimally, I think having, whether it's things like the advisory board or our codified tools in a place where they can go get help, is the thing that allows people to never feel that they're quite as out there all by themselves as they might otherwise feel.
Yeah. We like to call it entrepreneurship in a supportive environment.
Yeah.
And just creating that scaffolding around them.
Right.
So, obviously our model is a bit unique. We build businesses through the search fund model inside this sort of public holding company structure. I'd be curious, what strengths do you see in the search model of an entrepreneur-led acquisition? We'll start with that.
Well, I would just say I learned how to answer that question really by the slides that you put up earlier today. It was incredibly powerful the way you laid out not just the academic research on it, but the dynamics of why search ultimately works. The one to me that resonated most powerfully was essentially the seller and the buyer page, and the individual characteristics as to how, in the search model, the alignment of the seller dynamics that you had over here and our team's dynamics over here are so perfectly aligned that, to me, that almost says it all. Is that perfect alignment?
Yeah.
And it's something that if you tried to do that, create that same slide for any other enterprise model, I think you'd have a tough time seeing as perfect an alignment as that.
Yep. So, what unique challenges do you think that the model presents that are different than?
Well, there are some challenges. There's the one in particular that sticks out for me is it's a very individualized effort, right? So on this side of that slide, there's essentially kind of one person. It's Rob searching, or it's Davide searching, or it's Drew searching. At their desk, think about it. It's just you. You don't have a team. You wake up in the morning and you go to a desk, probably in your apartment, and you do your work to search for a company. That's hard. That's really hard. It makes running the company feel easy because you have a team, you have people, you're doing stuff every day. So that's number one. Number two, your relationships across to the seller are challenging because you are trying to represent something bigger than just yourself. But yet really what you're selling is you. But you're trying to convince a seller that doesn't really understand why this is, like, what are you a part of, or where's my company going? You've got to both communicate your understanding of the market, you've got to communicate your understanding of their business, you have to build a relationship with folks, and you have to convince them that the place where their company that they've put their whole life's work into is going to be a place that they're still going to be proud of after they've parted with it. And so it's challenging.
Yeah.
It's challenging. On the flip side of that, though, the seller over here would much rather talk, at least my experience being from a big company talking to small companies that we want to acquire, that seller would much rather talk to somebody like Rob, who invests in understanding them personally, who invests in understanding the legacy of that business, who invests in convincing them that they're going to protect and be a good owner. They'd much rather talk to Rob or Drew or Davide than they would somebody from some corporation they've never heard of and their business going into some morass of an enterprise that'll never be found again. And so it's a very difficult process, but a really powerful one when you think about the personal nature of search to a seller like we typically experience.
Yep. It's definitely hard.
All right.
some people don't appreciate how hard search is, but okay. So earlier today we talked to investors about the J curve of performance when you place an inexperienced leader into a new business and then begin making investments in people and technology and processes to accelerate growth. How do you think the advisory board and KBS accelerates the path down that curve to get to what I would call sort of the experience curve and the improvement curve to get towards growth and improve profitability?
Well,
or maybe it doesn't.
Well, no. I don't. I'm not sure the extent to which we accelerate it, at least on the downside. I think of it this way. The fact that we acknowledge the J curve to begin with is massively important, because by acknowledging the J curve, by acknowledging that when you acquire a business like this, that there are talent transitions, there are investment decisions that need to be made. You got to make some tough decisions that might not feel right from a top or bottom line perspective. Acknowledging that is enormous in terms of enabling a new CEO, a new president, to make those tough decisions, to do the right thing in the interest of the long term.
Yep.
I mean, too many of us who took on a newly acquired business would have lived in fear of making a tough decision, lest we do any harm in our view. But at the same time, when we hesitated, we were really mortgaging the long term. And so I think acknowledging is really what that's all about. In a sense, that does help to acknowledge that decision-making. It helps to accelerate the decision-making process. Do the tough stuff fast so that you can get on the upswing faster. Mm-hmm. So in that sense, it is a bit of an accelerator. It may not necessarily feel like that, but that acknowledgement of the fact that the tough decisions will happen up front and it could have some challenging impacts near term, I think is huge.
Yeah, wonderful. Maybe last one, and then open up to the floor. One of the defining aspects of Danaher's long-term success has been its culture of continuous improvement, and obviously the way that all of the best practices and tools were shared systematically across the operating business. Maybe can you, we talked about this a little bit. How should we think about documenting, sustaining, teaching, and improving KBS to ensure a similar system of learning and culture the way that?
Well, I would say first off, you're already doing it not only well, but dramatically better than we did in my time. And I say that because you've already taken so many of the best practices, documented them, codified them, and put them in your playbook, your digital playbook, that's readily accessible to the team. If you now, yes, we live in a more digital age today than what I grew up in our business world. I mean, I was thinking about this very question getting ready for today, and the first word I wrote to myself as I was thinking about this was primitive. I mean, we really were very primitive in terms of the way we passed best practices down. I mean, it was almost like thinking back into religious writings and the Gospels, where nothing was written down; it was just passed by word of mouth and experiences. And in many respects, that's the way we did it. I think what the Kingsway team has done really well is you've grabbed a best practice, whether it was something that you saw from the team or something you learned from Danaher or another source of a best practice, and you've done your best to write it down, to communicate an example or a particular circumstance, so that if somebody had a question on the team, they can go to that, read it, we can then talk about it and move more quickly through it. So I think the team's made extraordinary progress on that score, and I would just urge you to continue to do that, because it's a really powerful repository of best practices.
Super. Well, again, Tom, it's really amazing, not just for me and obviously all of our shareholders, but more importantly, all the incredible operators and searchers we have, to be able to have you as a mentor and share all of your wisdom and knowledge and history with them. It's to me, just an incredible resource, and we're very grateful for it. So
Wow.
thank you for your...
Super happy to do it.
Thank you for being here today. And you okay with a couple of questions?
Sure.
You know, a few questions for...
Hey, Tom, thanks for coming today. It's my understanding that Danaher has a DBS office consisting of, I've heard, anywhere from 25 to 75 people, which sounds like a lot. You know, Kingsway is still pretty early in its journey, but would you advise Kingsway to build up a similar type of function over time?
I'll come back to the Danaher part of your question that was a reference to Danaher in a second. Not anytime soon would be my answer. And the reason I'd say not anytime soon is that the two things. One, the repository that I talked about of information about best practices is in truth very super powerful. And that's a way that you can get best practices shared and good examples shared. And the advisory board is another. And JT, being as much of a lifetime learner as he is and a student of these principles, is already teaching and coaching in that regard. The DBS office, in my days, the physical place called the DBS office was probably populated by somewhere between 12 and 15 people. And if you've ever heard a number like 75, that's all the people with DBS titles that are in the operating companies around the world. So that's how you get to a big number like that. But they're not physically out in what used to be Wooddale, the product ID location. We never had that kind of number there. But remember that office became important in terms of deploying resources because we didn't have as much of the repository digitally available. We didn't have the frequency with which you bring the advisory board together. We didn't have the like-minded team of searchers that were looking all for the same thing. So there's a lot less viscosity in the way Kingsway and the team operate to share best practices than we would have had in these far-flung enterprises that, by the way, were of such a scale that, you know, you had to deploy people in there to pound the thing in some respects. So it's just different.
Hi, Tom. So markets first. I wanted the next level of detail beyond that, which is what is it about the markets? Is it more like sticky relationships with the customers? Is it is it like slow growth, fragmented markets?
Yeah.
Because fast growth means they could be disrupted by technology. What is it about the markets which?
Sure. Thanks for the question. It's multidimensional. And I wasn't kidding when I was talking about page 13. So high percentage of recurring revenue, capital light and non-cyclical, fragmented industry, long history of consistent profitability, low customer concentration, growth business in a growing industry. Now, you might think that that's describing a company. Well, it can be, but it also describes a market. So if you showed me a market that in general was characterized by high recurring revenue, that was generally non-cyclical, where the market was highly fragmented, where generally the companies were pretty profitable, where generally the customers were pretty fragmented, and that businesses across that market, just like the market, were growing, now you can start talking to me about a company you found. But that's as much a great definition of a market that I love and that we loved at Danaher. I'm on the board of a wonderful company called Roper Technologies. We could put Roper Technologies across the heading of this page and use it in an investor presentation. Those are characteristics of a great market.
And what are some examples of which were bad ones or which were good ones?
Well, let's see. It would be highly capital intensive from an investment standpoint. It would be transactional in nature. There'd be very little recurring revenue. It would be highly concentrated with about 4 or 5 key players, and they'd have about 6 or 7 customers. All kidding aside, that would be a bad market. Ken, time for lunch.
Okay, I think that's it for the questions. Thank you all for being here
Thank
today.
you all very
Thank you
much.
to Tom. Really appreciate it.